Shares in TD under pressure. Now, the bank has admitted that its money laundering prevention measures were sloppy, that they were inadequate. And then we got the Wall Street Journal and the Globe saying that U.S. regulators are probing alleged money laundering linked to drug trafficking in the United States. Apparently, according to these reports, fentanyl was involved. Investors not happy to hear about that. We are joined once again by Grant White from IA Private Wealth. Grant, great to have you back. Would you be a bargain hunter in TD stock right now?
Yeah, thanks, Andy. I'm still cautious on this. I mean, listen, when it comes to Canadian banks, I don't like drama, and this is surrounded by drama still, because I don't think we've seen quite the end of what this story is going to look like, and so I'm still cautious as it relates to TD. Now, we've owned TD in our investors' portfolios for some time. We're not selling off our existing positions at this point, but we're not adding to those positions either. I think that as it relates to this, it's got the makings of what could be bargain hunting, but we're not prepared to go into it just yet, just because we don't know how deep this story goes.
No need for drama, Mama, and yeah, you're steering clear of that one. You talked about big dividend yields before the break. What about TC Energy? Is that a stock that's attracting you right now? Just let me check on the yield, Grant, if you would. I forgot to check it earlier. About 7.5%.
Yeah, so TC Energy, I mean, they had a really nice report, and it's a company that's poised to do really well. I mean, everything is lining up really well for them. Especially when you consider the movement towards cleaner energy, they are going to be well positioned to be moving a lot more natural gas, and you know, something that's often not considered in that is obviously we look at, you know, alternative source of energy, whether it's wind or solar, and somewhat unreliability of those sources in some cases. Well, that doesn't work that well in a data-driven economy, in a data-driven world. And so natural gas can play a very critical role in that, and TC Energy is positioned really well on that. Now, in saying that, I'm not buying into this company just yet. I mean, again, I think this would be a good dividend chaser, kind of a trap, if you will, just at this point. And this is not to say that this company doesn't have that potential. I'm just a little, at the pricing we're seeing right now, I'm not ready to expose dollars to it, but like I said, it has all the makings and the potential to be a really good story, and so we're going to keep an eye on it.
So you mean there's a risk it could be a dividend trap. You get the big payout, but the stock never appreciates or doesn't appreciate for a long time?
Yeah, exactly. I mean, one of those things, it's got the nice dividend right now, which obviously everybody would love to capture that 7.5%. But if the dividend doesn't materialize due to, or doesn't stay due to lack of execution, or, you know, change in commodity pricing environment, or so on and so on, then it becomes a bit of a concern. So with TC Energy, like I said, I think this has all the makings of a good story here. It's just not something that we're putting dollars to work at. We still see better opportunities in other areas, not necessarily dividend driven, but certainly growth driven.
What about TELUS? Like our parent company, BC, its stock is down sharply over the past year. Would you be interested in picking that one up?
You know, I have a love-hate with the telecoms in Canada, and just because, you know, frankly, I think that they get, I mean, there's obviously a lot of exposure, and a company like TELUS, they're well positioned given the nature of the Canadian economy and the Canadian marketplace for them. So, you know, they command pricing power, which is attractive to a lot of investors. They have a really nice dividend right now, about 7%, I believe. And so the company is well positioned to attract investors, but I really don't like the growth story as it relates to TELUS. And because I just don't see a great future for that, and a lot of growth into the future. And so what that leads me to believe is that I think they're overpriced. I have a tough time getting out of bed in the morning for a company like this, where I don't see great prospects in the future. And it's not to say that TELUS isn't going to be a good company. I think it will. It just doesn't give me a lot of excitement about where the growth is going. And with that, the dividend's nice. You'll get paid. But I think that there are better opportunities that will lead to overall higher performance in other companies.
I think your take here is that the pricing on TELUS is off the charts. What do you mean, Grant, please?
Well, yeah, I mean, I think when you look at the growth prospects for this company, I mean, I wouldn't be paying nearly the levels that the market is commanding for this company right now. It would have to come down significantly before I would get interested in this, just at where we see this company's potential in the next 5 to 10 years. And again, certainly investors will point to the fact that, hey, we're going to get paid to wait for that performance because we have a really nice dividend. Fair enough. But I do think that there are just better opportunities outside of Canadian telecoms that I'm more interested in. So at these prices, it's just too rich for my blood. And it's just not something I'm willing to put dollars to work for.